Hi everyone, Rowan Smith with the Mortgage Center. I want to talk today about vendor take-back mortgages. Getting a lot more inquiries on them, and there's a fundamental misunderstanding out there on how they apply or whether or not you can even really use them. A lot of the no money down programs, Carlton Sheets, and all these other guys that are out there have been using vendor take-back mortgages. Now those programs are predominantly American. Now the technique does work here, but it's not as simple as people think. What they'll often say to me is, Rowan, I want to buy a $400,000 house. I don't have the 5% down. So I want to take a vendor take back for the 5%. What that means is the seller is loaning you the 5% down payment. Sounds good. Only problem is it's not allowed. So you can't do it under Canadian banking systems, because to do 5% down, the person who's got the first mortgage has to either get CMHC, Genworth, or Canada Guarantee mortgage insurance, most commonly CMHC. CMHC is not going to allow you to borrow 5% behind their 95% financing. Part of it's just simple risk, knowing that you have absolutely no money in the deal and have nothing to lose if you walk away doesn't really give them a lot of security that you're going to make your payments. But secondly, you end up borrowing more than the purchase price. And the reason is, when you put 5% down, you're going to be looking at a mortgage insurance premium through CMHC or Genworth or Canada Guarantee of anywhere between 2.75 and 3.35%, depending on what program you buy through. So if you're looking at 95% financing plus the additional funds for the premium, you're up at 98% financing. Now you're going to add your 5% that you're getting from the vendor. So you're up over 100% of financing. They're simply not going to allow that. And while the math may make good sense, or it may make sense to your realtor or advisor of why you can do this, it's realistically not going to happen in Canadian real estate. I've seen too many applications where people have tried to do a vendor take back, and it's really considered kind of a dirty word in the industry at this point. So if you're thinking of a vendor take back, the only times you can really look at it are on commercial transactions, or when you already have a very sizable chunk of money from a percentage standpoint, 20% plus for example, and are looking to maybe top that up by borrowing a bit back from the vendor. There's a number of ways we can structure this, and I can help you do that. If you have any questions on vendor takebacks, please call me with your situation. Let me go through it with you, and I'll see if we can make it work. For the Mortgage Center, I'm Rowan Smith.